Welcome back to Cover Your Assets. Mr. Craig Nestor is off today. We have Jason Walgrave and Todd Ricker in the house. You can join us too, 612-419-9425. That's 612-419-9425. Cover Your Assets. We cover financial tactics for the 21st century. And as we're wrapping up 2011, wow, I remember when the year 2000 was such a big deal. Now we're into like double digits here. We're not even we don't even have the 3 zeros anymore. But talking about kind of what went on in this past year, Todd, a great question for you with the type of clientele that you manage. And these are people, when we talk about people that have suffered loss and need to get back on their feet, in some cases, you're talking about big hitter bazillionaires that have lost millions, and then they turn around and they rise back into that. What I'd like to know from you at the various levels that you service there, what's different about this downturn and what people have gone through versus past recessions that you've noticed?
Well, there was always another rock to jump to. When something changed, you had the ability to retool and very quickly make adjustments and move into other areas that were rising markets. There's always opportunities in good times and bad times, but a lot of the traditional things that were available, financing, has become tougher. And that's one of the reasons that one of my new class at Kaplan is how to position yourself for future financing, because people have not had to concern themselves with that. It's been a formality, good times, bad times, if they had solid, stable income. Well, it's not the case anymore today. It's a little bit tougher. And so they got to know that. Our market is, without getting into great detail, we're not going to see our companies expand into oblivion and continue to see our market go up, because there's international markets that are influencing that. And the truth of the matter is, what's happened in the U.S., we're going to see companies individually rise, but we're probably never going to see the rise of the market overall that we've seen in the past. So a lot of things like, hey, I just invest in the S&P 500, an index of the top 500 companies, and I can expect to see a 10, 12, 15% return over the course of 10 or 20 or 30 years. I don't think we're going to see that. And so a lot of the things that were available in the past, we're going to have to really retool. But having said that, I'll revert back to the fact that there is opportunity. There's tremendous opportunity, but you really have to see it. You have to look, and fundamental things are always going to be important. A roof over people's heads, food on the table. These are things that are going to be important, which means these are businesses that are still going to thrive in these markets, and people have to be smart enough to know where the opportunity is and then manage their money properly so they can take advantage of it. Listen, if you could look at 2012 in arrears and it had already gone by, you would have seen the tremendous opportunities, and you'd have said, why didn't I position myself to take advantage of that? Because what everybody says, well, look, here it is. New Year's is coming at us. You want a New Year's resolution? Get yourself into a solid position. You're right. We deal with people who are worth $100 million 10 years ago and are now losing their personal homes. But let me guarantee you something about the mindset of that individual. They have no interest in staying there. Nobody can take away what they've learned and what they have in their minds. And as soon as they get through their crisis, let me guarantee you, they will be screaming back to the front of the line all over again. Those are the people I like to work with, and that's what I like to try to help people do.
And on your appearances here on Cover Your Assets, 612-419-9425. That's 612-419-9425. Really have to do with kind of spreading this unbiased advice out to people who may not necessarily have the funds to hire you, but you want to share some of the more important things that you've learned. So Jason Walgrave, real estate, boy, it's never been in the news as much in my entire lifetime as it has these last few years. Give us your take on a recap of 2011, the year in real estate.
Well, what you've seen when you're talking about real estate, bank-owned properties, REOs, you've seen those decline a little bit, and you've seen short sales increase. So, when Todd talks about, you hear people say, "Oh, I can't do a short sale; it's never going to get done." They're getting done, and on the reverse side of things, keep in mind the media, the newspaper, the news at night. Talk more about the negative things that are going on in the market. I mean, you hear more negative news about real estate, and it's in the paper every single week. It's important to step back and look at the reality, look at the facts on what's going on. The facts are, in most cases, it's cheaper to own than it is to rent. You can break down, the nice thing about real estate is when you're buying for investment purposes, it's numbers. You just look at the numbers. Instead of getting emotionally involved in, what's going on, just take a look at the facts and take a look at the numbers. And I think that you will see like Todd says, and I agree 100%, this is incredible opportunity. And 10 years from now, we're going to look back and we're going to say, wow, I wish I would have bought more real estate.
Absolutely. I remember years ago getting a postcard saying you can own for less than rent. Okay. So, and I thought, okay, let's just make this phone call, right? Well, okay, it was this teeny little 1-bedroom condo. I mean, it was like this cracker box. And really, it was about $300-400 more than you could rent something like that. Actually, a lot more than that, than you could rent a comparable unit. But they were making that statement on that postcard, taking in every potential thing, your tax savings, and all this kind of stuff. And you were still over that. So that statement really, in the last couple decades, really hasn't been true. Whereas now you can buy a house and pay, with $1,000 mortgage payment, be in something bigger than you can rent an apartment for.
Or even less than that. I was in South Minneapolis this morning and looked at a few homes that were around $100,000. These were 2-bedroom, 2-bath, really nice, move-in ready, nice little yard. I mean, great condition. These homes, taxes, insurance, principal, and interest, you're going to be around $750, $800 a month. And to own your own home, incredible. And you can't rent that house for that.
No.
You'll rent it for $1,200 a month, which is why the investment potential is there.
Yes.
The problem, of course, is that there's great opportunity, and people aren't understanding enough about financing to position themselves. If you've gone through a financial storm, I got to tell you, it's really odd to be doing the work that I'm doing, and with Kaplan Schools. They had come to me and wanted me to teach a class. The name of the class, listen to this one, is Strategic Default.
Oh.
How to strategically default. Now, if that isn't controversial, I don't know what is. But listen, in this market, it's not so shocking. 10 years ago, can you imagine if for continuing education to financial professionals, you'd have been teaching a class called Strategic Default, how to strategically default and walk away and rebuild your life? Wow.
Yeah.
Wow. So the times have changed quite dramatically, but when you go through a situation like this, your goal is immediately to retool and take advantage of the marketplace. And you've got to know enough about future financing to know how to position yourself to be back in the game quickly. Because if you buy and hold, that's the strategy. Today, if you're going to be in a house for 2 or 3 years, well, look, then you shouldn't buy a house.
Probably
but if you're going to be in a house for the next 5, 10 years for sure, well, then it's a tremendous opportunity. And that's, as an investor, again, as it should be, you need to have a long-term approach. Nobody who's in the investment business likes dealing with people who have this short-term, go to the horse track mentality. I want a long-term thinker, somebody who understands that there's going to be appreciation in the marketplace over time and that we can make money at this. But it's not a quick get in and get out day trade type mentality. And if you've got that, there's tremendous opportunity, and you can position yourself and tool to be able to take advantage of that. And the faster you do, the less you're going to be looking back saying, geez, I wish I woulda.
Yeah, that's absolutely true. Another catchphrase we've used quite a lot here on Cover Your Assets, CYA21.com and 612-419-9425. You can reach us after the show there as well, 612-419-9425, is really the rise again of the American homeowner. We're all going to need roofs over our heads, Jason Walgrave, moving forward and everything else. So, what does that look like going forward?
Boy, if you're a first-time home buyer, I think that you are in an incredible position. You're able to purchase a home for as little as 3.5% down. You can get in on an interest rate of 4 or 4.25%. And even if you want to move up in 3 to 5 to 6 years, guess what? You can keep that property because you've got a super low interest rate. You can rent it out. Now, let's say you're cash flowing $300-400 a month. You can then put that to the house that you want to move up to. So, building future real estate wealth. Wow. Opportunity is there. First-time home buyers are in a great position. You can really be strategic and look at the 10 or 20-year plan and just and work the numbers around that.
Have you guys seen a big influx of interest in the last couple months, Jason, of people who have been sitting on the fence, just maybe getting their curiosity piqued enough to call in and find out what the possibilities are?
You know what? We are extremely busy. November, December, we're very busy. This is typically the slower time of the year in Minnesota for real estate. But things are, people are looking, interest rates are low. People are gearing up to make a decision because, like you said, a lot of people have been on the fence for 2 or 3 or 4 years. And you know what? They're tired of being on the fence. They're tired of renting. They're tired of not moving up to that, to that different lifestyle. And I think 2012 is going to be a very active, very busy year for real estate.
So, Cover Your Assets team today, the two players at the table, Jason Walgrave, Todd Rooker. Final thoughts as we close out 2011.
Take advantage of the opportunities that are in front of you. Whether you're in a good situation or bad, there's always opportunity. Nothing is insurmountable. It's not the end of the world. You can recover from it quickly, but you have to use intelligence and you have to have strategy. If you're in a position to qualify for financing, do you understand why aren't more people taking advantage of this? Because they're not in a position to do so. If you are, you have a decided advantage, but only if you actually take advantage of that opportunity.
It's important. 612-419-9425. That's 612-419-9425. Happy New Year, Jason Walgrave and Todd Rooker.
Happy New Year.
Most companies advertise to generate interest. At Rubicon Mortgage